Hey, what's up, good people? How are you? Welcome back to Stock Up with Larry Jones. Make sure you follow the prompter below by hitting the like, subscribe, and notification bell. Sorry about that, good people. That little prompter that's going to pop up right there. Yep, like, subscribe, notification bell. Hey, I'm Larry Jones. This is the family known as Stock Up, losing my voice from these allergies. But we're going to continue because we have a lot to talk about. Listen, make sure you don't fall for any spam in the comments section below. And anything I say is not a suggestion for you to buy, hold, or sell. Though I'm going to ask you what you're doing in this market. So I'm going to talk about why I'm not selling everything because we are, there is a recession coming. The question is when, and the question is when will you know? All right. But before we do that, let's take 3 minutes and go over other stuff that's happening right now. Right. So let's start with this. NEO. All right. So let's start with NEO provides March and first quarter 2022 delivery update. It was good people. Look at this. NEO started deliveries of their ET7 in March 2022. NEO delivered 9,985 vehicles in March of this year, an increase of over 37%. NEO also delivered 25,768 vehicles in the 3 months ending in 2022, increased by 28.5%. So NEO is killing the game right now. Okay, so let's look at it. NEO is up over 9% today alone. But let's look at the month. NEO is up 5%. Year to date, NEO is still down by 31%. So let's keep everything in perspective. Remember, when in doubt, zoom out, right? So now let's go to what's happening with GME, right? Look at the headline. Meme stock GameStop jumps on stock split plans. So GameStop is going to do a stock split, right? Making the price lower. And in a lot of people's psychological minds, rather than buying fractional shares, this makes GME more attractive. Just the movement of this announcement is positive for GME. And GME right now is up 145. It was actually up by 15%. Look at this. Shares of GameStop Corp jumped 15% in pre-market trading on Friday, which is today. And so those are some of the things that I wanted to talk to you guys about, right? And so now let's talk about the market and why I'm not selling everything. You're going to see people talking about selling everything, all right? I'm not doing that. We know a lot of YouTubers go through that. I'm selling everything. I'm selling everything. I'm selling everything. Some of it will be clickbait, and that's cool. I'm not hating on anybody else, but I want you guys to know what's going on. Now is the best time, I think, to start continue to dollar cost average. If you've been dollar cost averaging, now's the best time to continue to dollar cost average. The thing about a recession is most people don't know you're in a recession until 6 months after you're already in a recession. So just think about this. The average recession lasts about 11 months, and it's already 6 months in before you even know it's recession. Meaning that some people even say, hey, we could already be in a recession, right? But the past tells us 12 to 18 months is really after the yield curve inverts, which it did. The yield curve, the 10-year and the 2-year yield curve inverted, right? Just 24 hours ago, right? But then it flipped back. So generally 12 to 18 months after that, we go into a recession. Now, there has been times in the past that before we went into a recession, the stock market hit an all-time high, right? So we can still run up and hit an all-time high. I doubt very, 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 very serious if we're hitting an all-time high. As a matter of fact, today being a Friday, it's one of these days where we're going to have to keep our eye on closing bell, right? That last half hour, it being Friday. So keep an eye on that. And so there's a few lagging indicators that have yet to happen, right? Job loss, which could flip, and on a dime, as they used to say. And then the housing market. Now, the housing market, I brought it up the other day. The housing market is still hot or high, but there are changes happening in the housing market. Excuse me, losing my voice. So one of the things that is happening now is there is no more supply. This is one of the lowest times this was one of the lowest supplies that they've had to even sell homes, new homes, and there's just no more supply. So people are starting to wait now. And what makes it even worse is we have these interest rate hikes, which means for you to borrow money from a bank to finance a home costs more. And now some of the people that would have gotten approved on a lower interest rate are now not getting approved. So now the sale of houses cool off and they're going to start to fall. Remember back in 2007, 2008, when everybody was upside down in their home, we could be heading back to that. So the mortgage crisis, like I've been saying, is a huge bubble. So if you're looking out there looking for a home at this time, it is the time to be careful. The ones that are doing good in the housing market are the ones that own a home. So your home is worth more. So you could sell your home, get more, but you're going to pay more. You're in a better situation than a first-time home buyer. First-time home buyers could lose, and that's what happened in 2007 and 2008. They purchased a home, and then a month later, it's worth thousands of dollars less than what they purchased it for. That is a lead indicator of a recession, okay? A lagging indicator of a recession, all right? And it goes on through the recession. So I'm not selling everything. There's a lot of money to be made with people that know how to swing trade from now until the recession and all through the recession. Now, the best thing to be doing, I think, right now is to dollar cost average. Because remember, 6 months in, you won't even know you're in a recession yet. There's not a bell that goes off and says, ding, 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 we're now in a recession. So just keep that in mind as you dollar cost average, okay? And remember, I have a list. Just go on my page, dollar cost average. It's called Larry Jones $5 a day challenge, okay? And so I have 3 portfolios for you guys, an ETF, a growth stock, and blue chip. Right? So that's what I want to tell you why I'm not. Now, here is one other thing that you could do. I'm going to continue to dollar cost average, and it's going to be red, 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 red. Right now it's green. And I'm going to get back to showing the portfolios on Monday. It's just so much to talk about. But here's what you can do. What I'm doing is I'm going to continue to dollar cost average, but I'm saving my cash. As you guys know, I was in some of those swing plays, got in some of those short squeezes, and made some cash. But that cash I'm keeping. I sold all of my energy stock, my oil, and so that cash I'm keeping. And at a certain time, I'm going to sell my banks. That cash I'm keeping. And when the market goes down in the recession, then I'm going to deploy all of that cash and start to dollar cost average in near the bottom, because at the bottom of the recession is the bottom of the market. All right, good people, I'm going to leave it right there. Hey, make sure you check out all of my links below, all of them. What I'm also want to do is let you guys know, I do Technical Tuesdays, but I'm going to leave a link in the box here. I did charting with Josh Nichols, all right? So technical charting, which is important to see and to know what the market is thinking about doing, all right? So if you want to know how to chart stocks and crypto, we had a discussion, a frequently asked questions. So I ask questions as if I were you, and Josh goes over the charting. Okay, so I'm going to leave a box at the end of this. You definitely want to check that video out. Make sure you check out all of the links, especially Webull, Moo, and Coinbase. All right, good people. Love you guys. Live, love, laugh, and learn.
What's up, good people?